Kemi, thank you very much for coming through on this Women's Day program. A lot of drama at the NSE yesterday led to a bit of truncated trade. Today things seem to be working out a little bit better. Your view on the market today?
Yes, I mean, we've largely seen the market open and trade as we usually would have it today. We saw a lot more activity than we did yesterday because a lot of the trades couldn't be executed. In terms of movement, we actually saw very large trades on two stocks, Owando and Nigeria Breweries. Owando traded as much as 81 million units in a block trade that we believe was pretty strategic. We also saw some significant movements in Nigerian Breweries as well. In terms of the major market price gainers, we saw NASCON gain significantly. We also saw AfriBank and NBC.
All right, now let's talk about results that were released yesterday but unfortunately overshadowed by the change of guard at the NSE. Stanbic IBTC, some experts say, you know, the results are broadly flat in their opinion, but if you look at Stanbic in relation to other banks in Nigeria, it's a strong performance. What's your view?
I mean, we largely agree with that. We have to look at it relative to all the other releases we've seen from banks. Yes, on a year-on-year basis, it appears that gross earnings grew by just 4%. Quarter on quarter, it was practically flat. But closely looking at it, yes, Stanbic IBTC suffered from the same had the same experience we've seen from many of the banks. There were interest income actually dipped by 18% on the back of the decline in lending yields that we've seen right across the market. But significantly, they were able to reduce their interest expense line by 54%, and that helped improve the net interest income profile. But we still saw net interest income drop by 3%. But what helped their overall performance was actually their non-funded income. Going to the non-funded income space, we saw fee and commission income actually grow by 41% quarter on quarter, even though that line also suffered from the FX side. But overall, we saw non-funded income grow by 8%, right, and we saw operating income actually improve by 3% for Stanbic IBTC.
All right, we've seen their operating expenses grow, and that's largely due to their opening an additional 30 offices. Into the second half of the year, how do you think this growth strategy is going to impact on their earnings? Is it going to be positive? They're going to start seeing rewards, or are they going to continue to bleed a bit of money?
I think we're already seeing the rewards for Stanbic IBTC. They have a project called Project 100, which they have a target of opening 100 offices in 2010. They've opened 40 of that so far in the first half of the year. We know they're still working towards their target. I think what it has helped them do is replace much of the expensive deposits that they had prior to 2010. They came into 2010 carrying a significant amount of term deposits that were really expensive. And looking at their deposit line as at half year, it actually declined by about 14%, and even though they grew their loan book, we saw the deposits reduce, and we know it's because they're trying to take off a lot of those expensive deposits from their deposits book. The challenge for them now will be, with these branch expansions, enable them to reach the more retail markets and get those cheaper deposits now that we're in an environment where deposit rates are really low, and replace those deposits and grow their deposit books once again.
Right. Okay, now we also have heard that Stanbic IBTC might be buying into one of the rescued banks in this much publicized bailout of banks, and now with the AMCON coming through. Is it a wise move, and are we certain that they're going to move in that direction?
I mean, yes, they have said so previously. Of course, we have no exact indications of what they or who it is they're looking at. But they've stated several times that they would like to enlarge their footprint in Nigeria because Nigeria is underbanked. They believe that there's a lot more in terms of services that can be provided to the general Nigerian retail banking space. So yes, I mean, from that point of view, we do believe that it's a move that it's key for them. Yes, it would, I mean, really mean some costs in the initial stage, but we believe that the longer term play is actually important. For us, right, IBTC is the strongest growth play in the Nigerian market, right, and that M&A acquisition, right, will work in line with that strategy.
And then very briefly, Kemi, some have rated Stanbic IBTC as a hold, not a buy. Do you support that? What's your view?
Yes, we're also actually neutral on Stanbic IBTC. Also, I mean, yes, we're beginning to see that growth in earnings, but like I mentioned, it is a growth play. And whilst they're embarking on that growth phase, the kind of growth in earnings that we would love to see, we probably know we would not expect for now. With these results, they have an annualized ROE of about 13%, which is slightly below the guidance that management had given us of between 15 and 17%. If they continue at the Q2 or half-year run rate, then they wouldn't be able to meet those 15 to 17% targets.
All right, Kemi Owonubi, another beautiful and